Guys, look, I know that this channel's called Bitcoin Not Crypto, but I finally found a use case for crypto outside of Bitcoin, and it's the same and only use case that crypto has already found, which is fiat payment stablecoins. However, right now, stablecoins are backed by treasuries, and with the Genius Act, that's even more enforced. So now there's no Bitcoin-backed stablecoin, which I am going to show you how there will be in the future and how this will all play out. My name is Forrest Hodel. I'm a Bitcoin educator, and for those that want to book me for a one-on-one coaching session to cover Bitcoin best practices, security for Bitcoin, and so on, you can do so in the link in the description. So MSTR, the public company with over 600,000 Bitcoin, issued a preferred stock called STRC, or Stretch. Now, Stretch is designed to stabilize between $99 and $101, essentially being a financial stable product that spits out a yield. Their yield they're currently aiming for is 9%, but that yield will also vary to stabilize the price at their target range. Now, that is very similar to a stablecoin in the way that stablecoins are issued. They are geared to stay stable at $1. Now, what I'm going to advocate here for is something that I stumbled upon thinking the first time I made a video about Stretch. I want to go into how possible it is to create a stablecoin that is backed by Stretch and therefore backed by Bitcoin. Because right now with the Genius Act, the stablecoin issuers that are regulated within the United States, they are forced to back their stablecoin one-to-one with short-term treasury bills. But Stretch is a financial product. It is not natively a stablecoin. It is simply a financial instrument that the company that issues it takes the cash that they've raised by issuing it and they buy Bitcoin, and therefore the product becomes over collateralized by the Bitcoin holdings of the company that issued it. So it's not being forced to hold these treasury bills which leak capital and don't outweigh the money debasement that happens. So one thing I plan to share with is how this ends up becoming a stablecoin. But first, let's look at how they stabilize the price of STRC. So this is from the STRC investor presentation. And when the price goes above $101, strategy will decrease the dividend rate, increase STRC via second offering at or below 101, and call STRC at 101. When it's below the $100 range, or the 99 to 101, Strategies Toolkit is increasing STRC dividend rate, so that incentivizes more buyers and that buying pressure raises the value of the shares, or cease selling the STRC ATM below 99. So this is a financial product though. So if you hold this in a brokerage, you can't peer-to-peer send this to somebody. You can't send this over some sort of crypto rail. You can't use this as a payment system. You hold this more as a instrument that provides you yield, or replacing a high yielding interest savings account or a treasury bill or a money market fund. That's what this instrument is built for. However, a stable coin could be built, or a token, a crypto token could be built that is backed one-to-one with this instrument, right? And so we're going to take a look at examples of a company that is already doing this with an MSTR product, which is their common stock. So the company is STOKR, or Stoker, and let's take a look at exactly what they've done so far. They use the Liquid network, which is a sidechain of Bitcoin developed by BlockStream, the same company that I recommend getting a hardware wallet from that makes the BlockStream Jade and BlockStream Jade Plus. They developed a sidechain of Bitcoin that requires one-to-one peg-in of Bitcoin into LBTC with a different type of consensus mechanism built on a federation, and it's much quicker, and you can create tokens on it. So that's what this company has done. These are all the tokens that they've created. So H100 is, I believe, a Swedish Bitcoin treasury company. This is a token built on the Liquid network, and it's to be announced. It's not quite there yet. And it's on the Liquid network, and it's for its convertible notes. Here are some mining tokens associated with BlockStream. They're mining. The H100 note is on there, so that's a group of the stocks fully backed. You can see here Metaplanet. These are tokenized Metaplanet stocks fully backed, and CMSTR, which is 100 shares of MSTR, is tokenized into one of these tokens. Now, this trades 24 hours a day. So that is sort of the main reason that somebody would want to trade this, is that it is traded 24/7. So you can trade MSTR without having access to the markets during that time. There's $16.8 million of capital put into this tokenized MSTR and $11.4 million into Metaplanet. So people are trading these. Of course, that isn't huge, massive amounts. It's significant, but it's not insane, right? Now, what is definitely possible here is that this exact company or a company like this could tokenize, again, STRC onto a crypto network like Liquid that allows tokenization, or that has the protocol for tokenization, and people could hold this in their own wallets, and you could actually build in a mechanism that pays the interest to the token holder, and there could be some sort of revenue split for the token provider. So somebody could create this token, say it's Stoker, and they earn 1% yield for the token holders. And the token holders earn the 8%. And they're able to hold this and use it as a stable coin. So right now, if you hold USDT, there's no native yield coming off of USDT for USDT holders. They are forced to lock it up into DeFi contracts to earn some sort of yield from it, or have it within accounts that might pay yield, but they're rehypothecating that USDT. And again, that USDT is not participating in buying more Bitcoin. I mean, Tether, the company itself, buys and holds Bitcoin, but it is not backed by Bitcoin. These USDT notes are buying treasury bills, and Tether is earning the interest from those treasury bills, and a portion of that is going into their personal Bitcoin treasury. With this, if somebody buys STRC or STRC token on Liquid, they are providing capital to MSTR, and MSTR is full porting that into Bitcoin. And the backing of STRC is the company MSTR and the placement in its capital structure in case of a liquidation event. And because it's pegged, or very similarly going to be trading at its liquidation preference, it's over collateralized, and nothing's guaranteed, but it's so high on the capital stack that if a liquidation event happened for MSTR, it's going to pay out to the STRC holders their full amount of investment. So right now, STRC, $100, right? If you were to fractionalize, if you were to tokenize and fractionalize the shares of STRC, you could fractionalize it down to 1/100th of a share of STRC, and therefore have $1. You could have $1 worth of STRC and be able to trade it on the Liquid network and move it back and forth as a fiat unit that is equal to $1, except that it's paying you an annual interest rate of close to 9% based on the whole system that's available currently. Now, again, I want to reiterate, I don't think this is the future of finance. I think that this is an arbitrage moment where if you have to hold some sort of cash, you could hold cash in an instrument like this that's at least paying you some sort of percentage and buying Bitcoin actively with the investment that you've made into holding this instead of regular fiat. So I think a company like Stoker is well positioned to create something like this. This isn't something that anyone can just go and create. There's some regulatory compliance and with owning a financial product like this and custodying it on behalf and having sort of this additional layer in between it and you. And there's also the tech that needs to be built so that the yield percentage will pass on to the holders. It's not really a very simple thing, and that's why it doesn't exist today, but I absolutely believe that there's got to be people working on it. If it's not Stoker, it wouldn't make sense to me that nobody has thought of this and that nobody is actively developing it, that has the expertise to develop it. This is definitely something that could be highly profitable for a company to make. Now let's talk about something else that I believe is a possibility if it happens in time. So there's this concept, right, of the 4-year cycles that we've historically seen with Bitcoin's price. And even, you know, if it all lines up, it's going to be this fall sometime that Bitcoin's price crashes. And what people try to do is they try to time the market, or some people do, and they buy Bitcoin, they hold it, they see a blow off top, they might start selling, they DCA out or whatever. Typically, they're selling out into fiat, whether that's cash in a brokerage, if they're trading within a brokerage, or if they're doing Bitcoin direct, they might be trading into an account balance, but a lot of times they're trading into stable coins. They're trading into USDC, USDT, or what have you. And when that happens, that increases demand for those stable coins, and then that demand goes and gets turned into treasury bonds, right? Or T-bills, short-term treasury bonds. And if this gets developed, if STRC, the token, gets developed and it becomes accessible and people understand that it can provide a native yield and they don't have to stake it and have it rehypothecated and all this garbage that happens, they're going to see that as a better option to trade into. So in the cycle, right, we see this blow off top, we say, okay, we're going into Bitcoin winter, people move into STRC token, and that provides liquidity and buying of more additional STRC, which fills the cash coffers of MSTR. And MSTR has a very reliable track record of as soon as they have cash, they buy Bitcoin with it. So you're selling Bitcoin to buy STRC, and MSTR is using the capital you've put into STRC to buy Bitcoin. So is there net selling even happening if that's the case, right? That's the question there, right? And there's a little bit of loss, a little bit of inefficiency because MSTR has to pay that 9% to have access to that capital. And so they can't fully allocate to it, or there's a slight inefficiency there. It's not direct one-to-one, but it's very close to being a one-to-one switch. Now, of course, this tokenized STRC is just in my imagination at this point. It hasn't been developed. It hasn't been adopted. It's not widely available. Again, it doesn't exist yet. But if it did, and if it was compelling, and if people used it, this could be a huge opportunity for MSTR to buy more Bitcoin, preventing or muting a downside price action, which is really, really wild to think about. So what do you guys think? Is this theory just way too far out there? Is this the Charlie Day meme, the Pepe Silvia meme of him, you know, connecting all the strings here? Do you think that this is possible? Do you think this will happen? I'd love to hear it in the comments section. And again, guys, if you want to book a one-on-one session with me to talk anything Bitcoin, to answer the questions that you might not even know to ask, you can do so in the link in the description. I also have links for every single thing you need as a Bitcoiner with discounts and bonus rewards. So there's Bitcoin Well, great non-custodial exchange. You get bonus Bitcoin for signing up using my link. The BlockStream Jade is a great beginner intermediate wallet, linked in the description. Stampseed kit, 15% off, 5% off of a Start 9 Bitcoin and Node server. And also check out Sats Arcade. It's my recent project. I've co-founded it, co-built it. It's a play-to-earn mobile gaming website where you can play games and earn sats, and it's a really, really cool little ecosystem over there at Sats Arcade. There's a link in the description as well for that. Thanks everyone for tuning in, and we'll see you on the next episode of Bitcoin, Not Crypto.